Hello. In this video, we will cover the main findings of the article, Urban Vibrancy, Human Capital, and Firm Valuation in China, published at the China Finance Review International. Existing literatures on China capital markets show that improving local environments that enhance firms' productivity or investor demand for stocks helps to increase market valuations of local firms. In this paper, we study whether city-endowed vibrancy, which are fixed local environments, helps to explain geographic dispersion in firm valuations. Here we define city-endowed vibrancy as the locational or historical comparative advantages of a city's production factors like capital, labor, and technology. We measure city-endowed vibrancy by two ways. One is to use city fixed effects, and the other is to use measures of a city locational advantages or historical advantages in human capital creation. Using city fixed effects, we find persistent city heterogeneity in local firms' market valuations. We also find several endowed city vibrancy factors that help explain such persistent geographic firm valuation premia. Our sample includes over 1,000 firms listed in A-share markets, headquartered in 35 major cities covered by the annual China Statistical Yearbook. The sample period spans from 2001 to 2018. Our first step is to study whether firm valuations exhibit city fixed effects. And the second step is to test whether firm valuations can be explained by observable measures of endowed city vibrancy. We measure firm valuations with Tobin skew in the main tests. In step 1, we test city fixed effects in firm year panel regressions with controls for a number of firm characteristics and the city attributes that are changing across time. We also control for industry year interaction fixed effects. Our results show statistically significant city heterogeneity in local firms' valuations. Additional tests based on split samples find that such city heterogeneity is stronger among larger, more mature, and more labor-intensive firms, suggesting those firms are more sensitive to the persistent urban factors. In step 2, we replace city fixed effects with, number 1, factors related to historical advantage in city human capital creation, measured by the average educational level and the city population size in year 2000 before the start of our sample. Number 2, factors related to comparative advantage in city geographic location, measured by the January average temperature, the July average temperature, and the indicators for 1,000 or port city. Our results show that the city educational level in year 2000 has a significant positive effect on explaining local firms' valuation in the next 18 years. Additional tests show that this effect has more than tripled from the first to the second half of the sample. Our tests also identify a significant positive effect of the early year city population size in generating local firm valuation premia. This effect also strengthens over time, nearly doubled from the earlier to the later years. Lastly, we find that the winter climate of a city, measured by the January average temperature, has a positive effect on local firm valuation. and this effect remains stable across time. In summary, our paper provides the first systematic analysis of endowed urban vibrancy in explaining persistent geographic farm valuation dispersion in China. We identify several important urban vibrancy factors related to city-endowed comparative advantages in the quality and size of human capital supply and in winter climate. Our findings show that these urban factors have created long-lasting and growing shareholder wealth by attracting and retaining talents and human resources in local farms. Please visit the first author's personal website for data used in the study. Thank you for watching the video and hope you find our research informative and useful.